Tushar is asking the first question today. He says, good morning. Good morning to you as well, Tushar. He's asking about alkyl amines or fine organic, whether it is something that he can accumulate at this price for the long term. I'll come to you, Rajesh, on the fundamentals.
See, both of them have given fantastic returns in the past, and numbers have been quite good. And going forward, the China Plus factor is going to be a big beneficiary to both of the companies. Even a third one can be added to the same list as Balaji Amines, which is also in the same product line. So I would vouch for alkyl amines first, second is Balaji Amine, the third one is third. So this is the pecking order. One can go long for a time horizon of 12 to 18 months.
This one I am getting from Vivek, and he's asking about Tata Motors. He's saying that he's holding about 1,000 shares of Tata Motors at an average price of 450 rupees per share. He wants to know whether he should look to average further from these at these levels. What's your take on that?
Yeah, you can look to average. I think 420, 400 seems to be a good range for Tata Motors. I think we've seen the stock trying to fluctuate into this range, but it tends to hold up, this 400 pivot point for itself. So I think if your vision is long term, if you're looking to hold it up for 6 months, 1 year, and more than that, then I think it's a good time to try and average Tata Motors and bring your cost price as closer to 420 or less than that as well, if possible.
Okay. Incidentally, I was also lining up a question. This one's from Avijit, and he's writing in from Allahabad. He's asking about Tata Motors, but effectively, Rajesh is asking about Tata Motors versus Tata Motors DVR. And I actually also wanted to ask you about Tata Motors in the context of everything that we're seeing. On the one hand, you have tensions in terms of markets like Europe, markets like China, whether volumes for Jaguar Land Rover will pick up again. Raw material costs pressure is there. But on the other hand, you have the rupee depreciation that has taken place, which certainly will shore up the bottom line at some point, right? So how would you treat Tata Motors, and would you buy Tata Motors or Tata Motors DVR?
Alex, you said all the points which are going in favor of Tata Motors. One, they are very aggressively going ahead with passenger vehicles in the domestic market, and the bookings have been quite good. And two, the management has categorically said on records that by FY24 they will be debt free. These two things are going to be very positive for Tata Motors in coming days. And as far as buying either Tata Motors or Tata Motor DVR goes, I would prefer DVR for a longer term horizon. If somebody doesn't have a trading sort of view, then Tata Motor DVR is of course the best option, because there is no difference apart from the voting rights in both the shares. And as you forgo your voting rights, you get an extra dividend of 5%. And the best part is, I don't think most of the investors in India use their voting rights. So it's no point in giving up discount just because of having voting rights. If you're a long-term investor, go for Tata Motor DVR, because if Tata Motor performs well, the numbers are good. Tata Motors DVR will also follow what the main Tata Motor shares would be. They are both equity shares.
Right, so that's the view coming in on Tata Motors and Tata Motors DVR. Let me take this next question from Kader, and he wants an opinion on HDFC First Bank. He wants to know whether it's right time to invest in this particular counter. Rajesh, do you think that it makes sense to invest in IDFC First Bank at this juncture? And over the longer term, do you think it's a good investment?
See, longer term, there are a lot of stories going on, the bank being restructured, the holding company discount going, and this and that. But I don't think there is enough reason to put new money into this at this point of time, because there are a lot of many other banks which are trading at a huge discount to their 52-week high. Rather, I would recommend going for ICICI Bank or a Kotak Mahindra Bank, which would give better returns, and at least there are certainty that they are performing very well.
I'm coming to you, Kunal, on this next one. We've got Denny, our long-term or long-time viewer. He's writing in from the UK, and he tunes in, I think, very early in the morning every day, so I must appreciate that. He's asking about Sun Pharma. He's got 500 shares at levels of 890. Would you say that he should hold on at this juncture?
Yes, I think we should hold on now, even though the pharma prospects are not looking very, very attractive over the near term. But then when you look at, the within the sector analysis of the pharma stocks, Sun Pharma is the strongest stock in that patch. So whenever the pharma stocks get into a recovery phase or when there's a new rally shaping up, I would be of the expectations and the view that Sun Pharma could be one of the top performers, because of the last 12 months of consistent price outperformance with most of the other stocks in the sector. So I think purely on that aspect, I think it's a strong stock and you should definitely look to hold.
Okay, this one has come from Shanmuga Sundaram, TCS. He has about 110 shares purchased at 3,400 rupees per share. He wants to know whether he can average now for the long-term holding. What's your take on this one, Kunal?
Well, yeah, yes, I would suggest to average TCS at current levels. I think both Infosys and TCS, they, to me look very attractive on the charts purely on the short-term basis. I was, discussing this on the Chartbusters today as well about Infosys, that how the stock has formed a triple divergence and a double bottom. So I think on both these aspects, TCS as well as Infosys, they look very attractive to me. So you can look to go ahead and average.
Okay, Bajaj Finance. Incidentally, after yesterday's crack in the recent past, it has moved below its 52-week low. It's currently trading just below that mark at 5,443. 52-week low is about 5,488. This question is coming in from Krishna Mohan, and he's asking about Bajaj Finance for the long term, though. Rajesh, is this a good opportunity to buy this counter, considering the kind of crack that we've seen for the long term?
For long term, yes, of course, I would say go buy Bajaj Finance. Or if you want to be in a safer grounds, Bajaj Finserv would be a better play because it's a holding company of Bajaj Finance, and that's trading at a discount with other businesses as well in that. But as far as Bajaj Finance is concerned, it's a good got a good retail franchise with its consumer demand after this Russia thing. I think it's going to go up. Yes, there are problems because of rate hikes and all, due to which NBFC companies' margins are going to go down. But for a longer term horizon, these valuations are quite compelling.
Okay, this one is from Vaibhav, and he wants a technical and a fundamental view on Zensar Tech. He wants to know whether he should buy more or sell. He has about 300 shares purchased at 300 rupees per share. Kunal, I'll take this one to you for the technical view on Zensar Tech. How does this one look and what should he do with his holding?
See, I think if you're looking at it from a short-term play, as I said earlier, that possibly many of these IT names, mid-cap IT stocks, they could go into a process of a bounce. Now, Zensar Tech, if you look at the previous lows or the previous month low, I think the stock had made a low which was closer to 260. Currently, the stock is at 280 to 84 kind of levels for itself. So it's already been higher, almost 10% from its previous low. That itself tells you the degree of outperformance and strength for the stock over the near term. I would suggest a buy at current levels. Keep 262 as a positional stop loss, and on the upside you could be looking at maybe a 320 to 340 as a potential target for Zensar.
Okay, Rajesh, coming to you on this next one. Mr. Parsi is writing in from Bengaluru, and he's asking about Greaves Cotton. He's asking, considering the latest news, which I assume has to do with the investment of about $150 million into Greaves Cotton's EV arm. Would you suggest that Greaves Cotton is something to hold? I think he's holding at levels of 170, and he's wondering whether to buy on dips if the long-term prospects are good.
See, long term is good, no doubt, but no point adding more at this point of time because EV, as we all know, has a lot of problems associated with that. Even sometimes back, Mr. Bajaj or Bajaj Auto has gone on record saying that it's a long story to see how it performs. So if you want to play EV story, Sona Comstar is a better play. Greaves Cotton, whatever you are holding, you continue to hold, but I won't suggest an add at this point of time.
Okay, Rajesh, I know you spoke about Bajaj Finserv and Bajaj Finance, but Mithila Das is saying she has 5 stocks of Bajaj Finserv bought at the levels of 6,550 rupees per share. She's worried seeing the profits decline day by day, so she wants to know whether she should shift to SRF or something else. Do you think it's a right strategy? Because I know you've spoken about Bajaj Finance, Bajaj Finserv, good-looking companies, but what about shifting from Bajaj Finserv to SRF?
See, whatever correction one is witnessing in the large cap stocks, especially Bajaj Finserv or Bajaj Finance, is just because of market condition, not because the companies are performing bad. As I said, the company is good. It's a holding company of Bajaj Finance. Apart from this, they have two insurance ventures, general insurance and life insurance. They have got AMC license, which they are going to launch mutual fund very soon. The housing finance, they have 100% housing finance company. And apart from that, their lending business is doing very well. And IAMs are good. There are NPAs are very low. Asset quality is good. I think Bajaj Finserv is a best quality in NBFC on all parameters. There's no point in switching from Bajaj Finance Finserv to SRF. Stick to that. If your funds allow, you can add more, but take a time horizon of 12 to 18 months and be with that.
I'm not going to sit in judgment of people who look at the news and don't completely understand. That's what this program is for. So Rajesh, I'm going to come to you on this one. Suppose people have holdings in the future group stocks. Based on the latest development, they're looking a little happier at the fact that there has been a pop in some of these names. So you talk about future lifestyle fashions, which is currently in upper circuit right now. What would you suggest that people do? Do they take the opportunity that they have to exit? What should the approach be?
See, it's a very dicey situation because nobody knows what's going to happen, because Amazon is shouting from the rooftop that there is some foul play. Future Group is contesting that, and nobody knows the verdict, what it will come. Arbitration is into international courts also. So I don't think it makes any sense to stick to these stocks. Any opportunity, if you get by these uptakes, your price comes, exit.
Right. So, and I hope all of you actually have paid attention to this Rajesh's answer on this particular development. It's very crucial that you do not base your investment based on just one news piece, or if you just all of a sudden see a big pop in a particular counter. Please understand the technicals and the fundamentals of the stock very carefully before looking to invest in such names. Moving on, this one is from Raja Gopalan, and he has bought Heikel at the price of around 350 rupees per share. He wants to know whether it's good time to average. He's saying he's happy to hold for about 3 years. What's your take on this one, Rajesh?
Of course, it's a very good buy. The company has been doing very well since very long time, even before this China Plus factor came into limelight. The numbers have been good. It's a small equity base, and then valuation seems quite attractive. Even one can add to this.
We have to slip into a very quick break, but we'll continue with queries on the other side, so viewers do stay tuned. We'll start with a query from Rajan Manchanda on Life Insurance Corporation of India, so do stay tuned.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. What can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's get going with the queries. But let me take the Nifty queries that we've gotten. And yes, we did talk about Nifty and the levels and the way forward with Kunal at the start of the show. But nevertheless, for the benefit of our viewers, Kunal, I have two queries. Let me club them together. One is Sagar is asking, what's your view on Nifty intraday, because he's saying that it completely looks like a pressure buying from LIC and MF houses. So retailers don't panic and exit the market is what he is saying. This is what Sagar's view is coming in. And Rancho has also asked about Nifty. He's saying, has Nifty discounted the levels of upcoming results in June?
See, I think these are very difficult statements to really comment about. But I would probably bring it down to very important levels on the indices. So it's very, very important that in market sell-offs people don't lose heart in terms of sentiments. First is what the sentiment gives away, and then it's the liquidation which happens in terms of portfolios. One has to look out for more of long term. Look at quality stocks. 30%, 40%, 50% correction in so many large cap names is what we've seen in the last 6-7 months of this market, and that could turn out to be one of the best opportunities for maybe years to come by from current levels. So I think one has to have a very pragmatic kind of an approach over here, not look at who's going to buy and who's going to sell, as well as whether the markets are trying to factor in events which are lined up for the next maybe 2-3 months. Let the prices settle down. Let the prices show you a good amount of recovery. That could be a sign where traders can look to buy and then look to go for strong portfolio approach. At this level, it's very naive to try and preempt what the markets are doing right now. It's much better to try and wait and watch and let the market settle into a trading range.
Okay, very important point there. Life Insurance Corporation, as I promised, Rajan's question, he's got it, I think, IPO level, or during the IPO is what he says. He's asking Rajesh, what should he do at this juncture? It's trading at a huge discount to that IPO price. Should he acquire at this stage?
See, it's very unfortunate that the company which everybody was waiting for an IPO had such a bad listing. There were certain different factors for this. One, there's no demand. No demand supply mismatch. Everybody has got allotment, and there is no demand as such. Two, the market conditions are very bad. Three, the numbers in this quarter was not up to market expectations, and there are no hopes that the numbers are going to be good. There is an overhang of anchor of flooding, and every uptick in the market is going to face selling pressure because everybody is holding and everybody is getting frustrated. So at this point of time, adding to that doesn't make any sense. Let the prices stabilize, show some movement, then one can add. As far as fundamentals for a long-term horizon goes, I think it's a very good stock with an AUM which is larger than the cumulative AUM of the entire mutual fund industry in India. They have a whole lot of real estate which is impossible to value at across the country. Three, they have 70% market share. On valuation parameter, it's good, but the stock is going to face selling pressure at every uptick. So let it stabilize, then you can add. At this point of time, hold on to your stock, do not add.
All right, this one is coming in from our Twitter viewer, and this one is from Satish, and he is asking about Tata Steel. He wants to know whether it's a time to buy some more of Tata Steel or to sell. He is not mentioned about the quantum or the buy price or whether he's looking to enter afresh. But Kunal, Tata Steel, do you think that it is time to buy this counter, or if you're holding the counter, is it time to sell?
See, you can continue to hold. I would not suggest a fresh buy at current levels. Now, I understand that many of these metal stocks, they have been at the brunt of some extreme news flow as well as falling commodity prices globally as well. But this may not turn out to be a very short-lived pattern. This may be a pattern which could probably last for many quarters to come by as well. Now, when I look at the chart specifically for Tata Steel, the stock has broken below its major support, and I'm talking of the monthly chart. There was a huge support for Tata Steel at the, I think, 1050 or 1100 kind of a mark for itself. This marks probably a strong reversal, possibly a strong reversal for Tata Steel, which could have an effect for at least another 5 to 6 months, if not more. So I would suggest to wait and watch, not to jump in the stock because the stock or the markets are getting into some sort of a short-term bottom formation. There could be a possibility of further sell-off for many of these metal names over the next 1 or 2 quarters.
To you, Kunal, on this next one, Shree Cement is the name of the counter. Purnima is asking. She's got four shares at levels of 23,000. And she's lost quite a bit of ground, therefore. Would you suggest an average at this point? How long should she consider holding this, and what target would you give?
It would be a bit tricky because price-wise, I think, yes, Shree Cement is very attractive at current zone of 19,000, 19,200 odd, where the stock is trading. So price-wise, very attractive. In fact, I would probably expect the stock to get into a bounce where the bounce may materialize to say somewhere around 20,500, 21,000 odd mark for Shree Cement. But then this could be a very very nimble bounce for the stock price. In the scheme of a sharp downtrend, the stock is actually going to. So if you want to play for that bounce, you can look to average, maybe target somewhere closer to 20,500 odd, for a potential upside for Shree Cement. But then I think it's much better if you're looking at it more from a positional play to wait out for maybe the next 2 to 3 weeks. Let the stock show signs that delivery volumes are picking up and the prices have stopped falling below the 18,500 mark. So you can look to play out in whichever way you want to. Short-term wise, you can expect a bounce of 1,000 points plus from current levels.
Okay, this one is coming in from Dasaradi, and he's saying he's holding Adani Ports 100 shares at the levels of 750 rupees per share. He wants to know whether he should continue to hold on to it or exit. Rajesh, any views on Adani Ports, and what should Dasaradi do with his holding?
See, if it's a long-term holding, one can continue to hold it. It is one of the biggest logistic players, I would say, but seeing the kind of commodity prices and the shortage going on everywhere, the supply side logistic problems, I think in the short term, the numbers may be bad because of business, but for a longer term horizon, one can hold.
Ambat is asking about HCL Tech, 200 shares bought at levels of 1291. He's facing losses, Kunal, at this point. He's asking whether to hold for a period of 6 months to a year with the hope of recovering his cost price and making something on this. Should he do that? Should he average at this point?
I think it's a good time to look to average as well for HCL Tech. Now, I understand that the stock has also corrected very sharply in just the last 2 or 3 months. But then I think at 990, 950 levels, these are good price points where you can look to average HCL Tech. And possibly the bounce whenever it shapes up for stocks from the IT pack, it should be at least a 10 to 15% bounce from their major swing lows. So that should probably take HCL Tech back towards 1100 mark, which could be a new average price if you consider to average at current levels.
Okay, this one is coming from Sudhish. He's writing to us from Cochin, and he wants to know about Lux Industries. He wants to know about the fundamental view on this particular counter. One is he wants to know whether it's the right time to enter, and also whether over the longer term it makes sense to stay put with this holding once you enter into this counter. Rajesh, what's your take on Lux Industries?
One can definitely buy, hold. The numbers have been good. The company is doing very well. Expansions are on. They have merged their subsidiary into themselves, the ladies wear company. I think everything is going good for the company except for the some corporate governance news that came in some times back. But these are small-time blips, and for the longer-term horizon, it's a good buy.
I'm just taking a chance, Rajesh. Orient Green Power. Do you have a view on this? It's a penny stock, and we've got Simran who's bought at levels of 13. Any view on the fundamentals at all?
See, there are no fundamentals as such to talk about in this kind of company. It's better to exit. Being good quality names, even Tata Power, CESC, these are good power companies which are trading at a huge discount to their 52-week highs with good great expansion plans. Tata Power is moving into renewable energy and all sort of things. Why not switch to them?
All right. This next one that I have is coming in from Ramchandran V. His name is Sriram. He's writing to us from Chennai. Sometimes, the user handle name and the name is different. He's saying that he's holding Aditya Birla Capital at around 100 rupees per share. He wants a fundamental view on this one. Would you be able to share a fundamental view on AB Capital, Rajesh? He's looking to stay invested for the next 3 to 4 years.
See, it's a very good company with whole bouquet of financial services, be it stockbroking, be it mutual fund. It's the second largest AMC. They have insurance into this. It's very unfortunate. There's not got the kind of valuation should have got from a very long period of time. I think once the company decides to list its subsidiaries in some future time, it's going to be re-rated. For a longer term horizon, one can even accumulate this stock.
Akash from Delhi is asking about Gokuldas Export, which he bought at levels of 476, I believe. Kunal, do you have a view on the charts? He's asking for the technical levels to watch out for.
I think it's a very good stock. I've been tracking this stock, I think, since the last couple of years. It's been one of the few names, even from the mid-cap end, which has done exceptionally well. In fact, even on the short-term charts, it's coming closer to its major support point. 385, 380 has been a major fulcrum or a support point for Gokuldas Export. So I think closer to that level, I would suggest to average.
Raj wants to know whether it's good time to invest in polycab polycab at current levels. What's your take on this one, Kunal?
Well, I would suggest wait and watch for maybe a couple of days more. I think the stock is now getting into an accelerated sell-off. So you look at the price intensity of sell-off for polycab in the last 1 week, as well as in the last 2-3 days. The selling intensity has increased for the stock, which means that possibly over the near term, the stock can correct by at least another 100 points or maybe points, say closer to 2000 levels. I would suggest a wait and watch. Closer to 2000 mark could actually be a good entry point for polycab.
Okay, Nimisha Gupta has got a question on BPCL. She's bought at levels of 384, and she's wondering, Rajesh, if it's a time to sell this counter. I guess a lot of people had bought in anticipation of the divestment by the government of India, and that seems to be off the table right now.
See, you said it right. A lot of people were expecting a good valuation from divestment, and that has been gone off the table. And that is why this kind of selling pressure we are witnessing. I think this stock is going to be in a consolidation mode for some more time. But if you look at valuations are very good. More than 16,000 pumps, more than 6,000 gas stations, 3 refineries. Everything is going well. Even the company doles out good amount of dividends every year. So for a longer term horizon, I think this is an opportunity to accumulate.
Okay, and with that, let's kickstart with our rapid fire then, and let's get going with it. The first one is from KJ Singh. He wants a long-term view on India Mart. Can I average more at current price? What's your take, Rajesh?
It's a sell, Mane. We don't recommend a buy on this.
NBCC is the name of the counter. TRR Rao from Hyderabad is asking, he's holding at levels of 38, 1,500 shares. Should he hold or book losses, Kunal?
I would suggest to exit and block.
Okay, Srini from Chennai wants to know, Indraprastha Medical is a good buy at current market price for the next 2 years, Rajesh?
There are better choices like Apollo Hospital.
Vishal wants to know about Hindalco. Is it a good time to add or average, or should you wait for further correction, Rajesh?
I would wait for further correction. There are some pressure in metals.
Okay, Kunal, do you track Pithi Energy by any chance? Sapna wants to know about this particular counter. 100 shares, 313 is the buy price. What should you do? All right.
Okay, Avinash from Pune is asking about Emphasis. Should he, I don't know his buy price, but he's asking if we should average right now. Kunal, what's the view on the charts?
Bottom wise, you can do that.
Okay, Mahalingam has IOC, I think IOC, sorry, it's IOC at around, not the buy price is not written. He's holding IOC, facing a loss of about 52%. What should he do, Kunal?
Kunal, IOCL, short-term targets?
Yeah, I think the stock has corrected quite sharply, and I believe even from current levels, it looks quite weak.
Kunal, again, HDFC Bank, short-term targets, what would you look at? Rajiv wants to know.
On the upside, I would look at 50 DMA as a potential target. 1385 could be a near-term target for this.
Okay, Vishal wants to know Hindalco, whether it's good time to add or average, or should he wait for further correction? He wants to know whether longer term, what should he do? Rajesh, what's your take?
It's a good company, but wait for correction to add. There is some pressure on metal stacks. After maybe a 10% correction, goodbye.
Very quickly, Exide Industries, levels of 192. Tina wants to know, would you hold or exit? Long-term view, Rajesh.
Hold.
Okay.
All right, and with that, we are out of time on the query segment on Buy Now Sell Now. Thank you so much, Kunal, as well as Rajesh, for joining us on the show, giving us your take on the markets. Also, Rajesh sharing your take on the RRR. And also, yes, talking about Indian markets, how we're staging a push power. On that note, we slip into a break on this edition of Buy Now Sell Now. Stay tuned, more on the side. Don't go anywhere.